Hi everyone, this is Eric from Traders Helping Traders with this week's Tricks of the Trade. I want to show you a unique market formation this week. It's not one that happens very often, but when it does, it can give you a very powerful and very reliable signal. It's a formation I refer to as a big bar. Oftentimes we'll see the market make big moves one way or another, and oftentimes these moves can be scary. But when you see a big bar form, as we had form here in wheat, and then the market trade within that range for at least 3 days, and ideally longer, that gives us a very strong range from which to trade from. What this is telling us is that the market has made a big move, in this case lower, but it could be higher as well, and then prices got lost. Big moves carry a lot of momentum. Big moves should be followed through with larger bars, or at least more bars in the same direction as the big bar. But when you see a big bar and then the market stall, that's time for you to pay attention and get ready for a trade. Now, when I'm trading big bars, oftentimes you'll see something like this happen where the wick of the next candle will just dip barely below the big bar. I don't usually pay attention to the wick on this particular candle because really all this is a fishing expedition. Traders are trying to see what's below the low of the previous day, and they're looking to see if there's momentum down there. And in this case, obviously there was no momentum because the market closed back within the range of the big bar. So long as the body of the bar stays contained within the parameters of the big bar, I would consider this big bar formation to be intact. Like I said, you want to see at least 3 days following the big bar trading within the big bar's range. And the more days that are trading within the big bar's range, the stronger the breakout is likely to be when it first occurs. Now, big bar formations tend to be neutral. So to trade it, you could place a buy order at the top of the big bar and a sell order at the bottom of the big bar, and treat it very much like a channel. And whichever way the market breaks, that's the way you're going to go. Sometimes you'll have to consider using a stop within the range of the big bar, just because big bars by their nature would be rather expensive to bracket from top to bottom. But ideally that's what we would do with this particular type formation. And as you can see, when the breakout occurs, it's usually a relatively strong one, and the market will continue to rally in the direction of the breakout. So that's a big bar formation. So when you see a big bar happen on a chart, pay attention to what happens afterwards, because that could give you an early indication of a very probable trading opportunity. And that's this week's Tricks of the Trade.